Welcome to the review. I am traveling, so it's going to be a bit noisy, and you're going to have some background noises, perhaps. So ignore that and focus on the content. Now, the pound, GBP USD, GU, cable, whatever you want to call it. The draw liquidity was this monthly FVG, right? And that's the draw liquidity I gave on Twitter a couple of weeks ago. All right, what does that mean? That means we're expecting, if we're bullish, then we're expecting the pound to smack into this monthly FVG and then rally from there, right? What does this mean? This means that I want to buy at this higher time frame key level, the FVG, right? That also means that I'm bearish until we reach the FVG, right? So you either trade the PD array itself, the key level, or you trade the journey to the key level. All right, it's an important concept. So if I'm bullish on pound, that means I can either trade when it comes down here or all the way till down there. And that's an important concept which not many understand. So go to the weekly. Go to the daily. And what happened was that, yes, it did give us a smack back down. So we're targeting the wick, right? The target, the draw on liquidity for us, with the old icon, is the wick down there, right? Because a higher time frame FVG is a lower time frame swing low or high. Right, so we got a favorable reaction. You got a turtle soup on the 4 hour. Right here. So this is the target, right? Got a turtle soup. However, at this point in time, if you look at the dollar, there was an SMT between the dollar and EU and GU. So the dollar created a higher high. But on GU, they refused to push it lower, which is a crack in correlation between the assets. That's SMT, right? And some people think that ICT invented SMT, which is incorrect. SMT is an old concept. It was introduced by Charles Dow first, more than 100 years ago, right? That's what it means. It means they're accumulating GU, right? Which means it's the favorable asset to trade because it will give the more explosive, stronger move. Now, another thing is that on the monthly, the DXY filled the monthly FVG, right? Euro also filled the monthly FVG. What's missing was GU, right? It didn't fill it. Does that mean that we wait and we force the target? Nope, we don't. SMT is one of the reasons that FVGs remain unfilled. Right? So if you see GU filling, excuse me, not filling the FVG, but dollar is filling the FVG, right? Then you don't wait for GU to fill. You wait for the validation of the SMT. Now, how is that? How does one validate SMT? You validate SMT, right? Because one thing is, there's a chance of SMT occurring. It could also happen that it keeps going down and fills the FVG, right? That is why you always have to wait for a validation of SMT. SMT is best used. It's best used to confirm market structure shifts and or order blocks, right? So, and this was all planned beforehand on Twitter, right? Go back in time, go back in the tweets. It's not hindsight. This is live calls of the markets for the past year. So I stated that a clear rule, if we close above this candle, then we shall no longer reach for this low, right? So we got this reaction. It was a pretty decent, almost 100 pips, 150 pips move. And then as it went in our favor, we reached a point where there's a chance that we might reverse, right? SMT equals expansion, right? So because we have an SMT, I'm expecting an expansion. SMT will lead to expansion, right? DXY, higher high. EU, lower low. GU, higher low. Therefore, GU is the stronger asset. SMT, expansion. The confirmation of SMT, yes, you can trade it down here. That's a bit more advanced. The confirmation for SMT is closing above the order block, right? So this candle, this one specific candle that dug into the low, right? I'm not looking at a range, at a zone. Nope, it's one specific candle. I didn't even say a candle. I said if we close above Monday's high, then we shall no longer reach for the wick, and you will see higher prices, right? So caught this move. I entered here, and then as expected, we closed above this specific candle, this order block, right? As soon as we closed above it, boom, rally. They used this one specific candle to rally. And if you married your bias, then you got wrecked, right? So one thing you should never do is never marry your bias. All right, so in summary, expectation trading down to this monthly FVG. We get a move, and then before we reach the target, we get an SMT. SMT will stop your target from reaching, right? Have you ever been trading and then you see that you marked a high, and before that specific high or low was hit, price reversed? That ever happened? Chances are you're going to think yes, or even say yes out loud to yourself. All right, talking to yourself, or the computer. The answer to that is SMT. SMT stops targets from filling. SMT validates market structure shifts. Right? So, again, in summary, expectation, take this low, get a move. SMT equals expansion. Close above this high, confirmation, SMT, expansion. Range low, range high, SMT, expansion. Right? Here's a range low, here's range high. The bias will give you a trade idea, and the invalidation will give you a new plan. All right? So you're never surprised. You always have everything planned out. Now, you may be wondering, how did I know that we're going to close above this high? Why did I buy down here and not wait for the close? That is a topic for later in advanced entries, right? I hope you found this insightful. I wish you good luck, good trading, and a happy weekend.